Hello everyone, welcome to Commerce GYAN. Now, currently there is a big buzz about the Vodafone Idea FPO, which is upcoming on 18th of April. So it's around 18,000 crores worth an FPO, which is probably going to be the largest FPO in India. So it's a big event that is happening in India, which is going to be very interesting for people who are connected with commerce. I'm sure you all are interested in knowing about different things connected to this Vodafone Idea FPO. Now, first thing is, what is an FPO? What is an IPO? How does it take place? What is the price band? And how do people actually bid on this particular FPO? How do companies raise equity? And there are many interesting facts that we can know about this FPO. At the same time, investors who want to actually put in their money into this Vodafone Idea FPO would be wanting to know whether it is feasible to go for this FPO or not, whether it's good, whether it's bad, what would be the advantages and disadvantages of this investment, whether this company will perform well or not. So here I am to give you different views on this particular Vodafone Idea FPO. So before we go ahead, I just want to tell you that on Commerce GYAN, I'm going to keep sharing many interesting things. Not just that, this channel is meant for students who will be learning commerce subjects on this channel. On this channel, I'm also going to share interesting things which will be connected to practical things connected to commerce in our day-to-day life. So this is like one example where we're sharing about Vodafone Idea FPO. So stay subscribed to this channel so that you keep getting such interesting information ahead also. So let's proceed, and we are going to understand these things we are going to cover in this video is some news which is connected with the FPOs. We are going to understand different terms which are used in this FPOs, IPOs, QIB, NII, retail buyers, and so on. So which we keep hearing, but we don't really know what they are. So many people may have heard these terms, but you may not have the depth and the clarity on these terms. So we are going to understand the terms very clearly. At the same time, we are going to look at the investment opportunities in this particular FPO. What are your chances and what would be the gain out of investments? So whether this company, what are the chances of this company performing well ahead or not? So stay tuned till the end of the video to understand these different things connected with this Vodafone Idea FPO. So let's see the key points that we can have in the news that is you may have come across in newspapers and different media, which is specifying things about this particular FPO. The key points that they are telling you is that this FPO is going to start on 18th April 2024, and it's going to end on 22nd of April 2024. So it's basically worth 18,000 crore rupees. It's worth 18,000 crore rupees, and it's a fresh equity issue that the company is going to make. Now, the interesting part of this particular FPO is that 50% of this is by the qualified institutional buyers, or QIBs as we call them. Then 15% is going to be by the non-institutional investors. The rest 35% will be for people who, like you and me, who are the retail investors who will buy for this particular FPO, buy the shares from this FPO by placing a bid. For this company, it's a very important event because it already owes the government around 2.1 lakh crores in debt. So if it doesn't survive, I mean, if it's not going to take steps of survival ahead, it's going to be very difficult. And for its survival, it's very necessary that it keeps a pace with the market. So 4G, 5G, and competitors like Jio and Airtel are already there. So basically, this company needs to survive this competition, and for that, funds are very important. And for these funds, this particular FPO is a very important event. Now, company has already raised 2,000 crores in terms of preferential equity. Now, for understanding this FPO, we need to start from a little bit of basic understanding of how companies raise funds. So, company is a separate entity, and people who are the founder members, or people like you and me who buy shares of that company, are basically part owners of that particular company. So, basic understanding is that a company is giving away its capital to people who are ready to invest. And these people who invest in the company for, let's say, a indefinite period, it's lifelong, and they don't want to actually withdraw their funds. If at all I want to withdraw my funds, I'm not going to withdraw it. I'm going to actually transfer the ownership, like we transfer shares to somebody else. The shares are not withdrawn for the company, but I transfer it to somebody else who is willing to take over that ownership. So basically, there are two areas or two ways in which a company raises the funds. One is by way of owned funds, owned capital, and second is by way of debt funds or borrowed capital. So when we are talking about FPOs and IPOs, these are basically the ones which are connected with owned funds, right? Owners funds or the equity funds as they are called as. Now, when we speak of own funds, the owners funds or the equity shareholders funds, the company will have basically two parts. One is the equity capital that has been invested by the owners, and second part is any profit which has been built up in the company in the format of reserves. So when let's say you want to start a business, what do? You put some money from your savings into that particular business and you start off. Do you charge that particular business some amount against that fund which you've put? Let's suppose the business goes into losses. Will you say like, I want interest of 10% every year for this particular fund compulsorily, no matter whether you make profits or not? It's not like that, right? When you as an owner put money into that business, what happens? You give it away to the company or to that particular organization against, you can say, profit share. So if the company is in loss, there is no question of getting any money in that year. But if the company is in profit, then you will get some returns in the format of profits. So these are basically the own funds, the basic equity investment that has been made into the company. Now, as a company, as a public limited company, the company raises its funds not just from its core team of promoters, but it's also going to raise the funds from people who are the general public, or it could raise funds from other companies, other institutions who are ready to invest. So this is the first part that we see here is equity. Now, if this equity, when the equity is put into the business progresses, it makes profits. Now, some part of that profit will be given away to the equity shareholders in the format of what we call as dividends. However, there could be some amount which is kept as a reserve, set aside as an amount which is for future expansion of the company. So when I say own funds will be composed of these two together. The basic capital which has been put into the business, plus it will also be the profit that has been clubbed into that company, kept aside in the company for future expansion or any project work, right? So that is the owned fund concept. So whenever you want to raise funds by way of equity, what do? I'm just taking a simple example here. So if let's suppose the company wants to form with a capital of 1 lakh rupees. Now this amount of 1 lakh rupees will be what we call as the first capital that the company starts with, the amount invested to be, or the amount to be invested by the owners. So how do you take this particular 1 lakh? Now, 1 lakh could be a small amount, but if it is in crores of rupees, like this particular FPO of 18,000 crore rupees, so not one, I mean, it wouldn't be possible for a single person to actually invest. So what the company does is it shares this particular ownership. So that's why we call it a share. A share is a part ownership of the company. So like this 1 lakh rupees is divided into different shares, different parts of ownership. So if you say you buy, let's say some shares of that company, you become a part owner of that company. Now let's suppose this 1 lakh rupees is divided into 10 per share. So how many shares will the company have? The company is going to have 10,000 shares. So 1 lakh rupees worth of investment is now going to be divided into 10,000 shares. So if you find that only two people invest in the company, 50,000 and 50,000 each, there will be two shareholders. If there are four people who invest 25,000 each, then there will be four shareholders, right? And this 25,000 rupees which they have put in will give them ownership of 2,500 shares each. So this is how the formation of the company, the shareholding pattern of the company is decided. This 10 rupees value which I have decided for every single share will be called as the face value of the share. Fine. So whenever a company comes up with what we call as a public offer for the first time in the market, this will be called as an IPO. You may have heard of initial public offer. So when a company launches itself, let's say it converts itself from a private limited company into a public limited company, and it is offering shares to the general public as such, and then it will proceed to the listing of that particular share on the stock exchange, then we call it an IPO, initial public offer. When these shares are sold in the market, they can be sold either at a premium or a discount. So if the company is really reputed, then it will say, okay, I will not sell it at 10 rupees, I will sell it at 100 rupees premium. So 10 plus 100, 110 each. So you may have heard of shares selling itself over and above book value, over and above face value, then it is basically sold at premium. If the share is not a good share, or you find that the company is not actually having a say in the market, then they will sell the share at a discounted price. Fine. So if you see the latest example of this Vodafone FPO, this particular company already has its shares listed on the stock exchange, right? And the stock exchange share is trading somewhere around 12 rupees. Okay, currently. So what is the price that they are offering this new shareholding to the people? It's between the price band of 10 and 11. So that means it's it's a little below the market value of the share which is going on, so that investors can buy and then they can sell it in the market at a profit if at all they need. So that's like an incentive to buy the shares of Vodafone India. Based on this, now we can define what is an IPO and what is an FPO. So if I say first time, if the share is launched in the market, then it becomes a initial public offer, first time, right? And second time, third time, fourth time, n number of times, as and when the company requires the fundraising, that time it will go for the second option, which is called as the FPO. And this FPO is in terms written as follow on public offer. So that's the reason Vodafone Idea is coming up with an FPO, not an IPO, because IPO already has been launched. It has already been given up in the earlier time periods. It already has equity shares which were issued to the public. Since we today can trade on Vodafone Idea stock, isn't it? I can buy and sell the Vodafone Idea share in the market, stock exchange. So already it has equity shares which are with the public. So now more shares it's going to infuse in the market for the purpose of raising funds for its expansion purpose, right? So IPO is generally done with the motive of fundraising for the first time when the company turns from a private to a public limited company, and FPO is generally done with the motive of expansion purpose, or it may be done with any other motive in mind. Basically, you will have two methods when we are talking of FPOs. FPOs will be done with the dilutive method, which is done like in this case, Vodafone Idea, or it can be a non-dilutive method. Now, what are these two methods we are going to just see? Now, there are two types, dilutive FPO and non-dilutive FPO. Like if I say I have already number of equity shares in the company, number of equity shares in a company is 1 lakh rupees. Sorry, 1 lakh number of shares. So if 1 lakh shares were already existing in this particular company, then if I issue more shares, that means new shares issued by the company will be 50,000. Now, what happens to the total number of shares? The total number of shares become 1,50,000. So, what is happening to the per share profit of that company? Per share profit will be less. If I have dilutive FPOs, then per share profit ahead will be less. It will decrease, right? So, suppose if your profit in the earlier time period was, let's say, 1 lakh rupees. This was your profit, net profit available to equity shareholders divided by the number of shares. So per share profit would be 1 rupee. Now, if new FPO has come up, and after the new FPO, what will happen? Your amount of profit, let's suppose it remains the same, and you have number of equity shares now 1,50,000. So what will be your per share profit? 0.66, right? If it was non-dilutive FPO, then you would have the same 1 lakh shares. And out of these 1 lakh shares, suppose there were two owners, A and B. A had 50,000 shares and B had 50,000 shares. What would happen in this case? 50,000 of this 50,000 shares each, they would probably give it to general public. Out of this, each one will give, let's say, 20,000 shares, 20,000 shares to public. So total number of shares will still remain 1 lakh. So in non-dilutive equity, what is going to happen? In non-dilutive equity, you will find that the shares are going to remain the same and the profit sharing per share is not going to change, because out of these shares only the public are going to get the shares. This is non-dilutive FPOs. But for Vodafone Idea Limited FPO, we know that it's a FPO which is in the format of dilutive FPO. That means there is a fresh issue of shares, number of shares are going to increase. So that means the impact on the number of shares of the of this particular company, Vodafone Idea, will be in the form of dilution of ownership. The original owners, including the government of which was part owner of Vodafone Idea Limited, now will face the dilution of their ownership also, because number of shares are going to go to other people, and so the rights, the voting rights are also going to be impacted. So not just the per share ownership or per share, you can say, profits will be reduced in this case, but also you will find that the ownership will be diluted in the format of voting rights. So per share you have one voting right in the case of equity shares. So if number of equity shares are going to increase and these are going to go to the general public, then or other institutional investors, buyers, then obviously there will be an effect on the voting power of the original owners. Now the question is that why is this company Vodafone Idea going for an FPO? The reason that they have told us is that they are going for this FPO because they want to increase their activities in the format of 4G and 5G. They want to add more subscribers to the telecom network, and for this they need to construct towers. They want to have modern equipments. So this would give them the advantage just like the competitors in terms of 4G and 5G network. Second reason that this particular company is opting for an FPO is what they're telling is they want to get more funds even from banks. Now, if you have more equity, then only banks give you loans, because you have to first put in your own funds into that business, and then only the banks and other institutions are going to trust you. So this particular FPO, another reason is for more fundraising. And obviously with this fundraising, more expansion, more beneficial activities which will lead them into profits. Currently it is into losses. And that's the reason we can say they're having the biggest FPO in India, which is 18,000 crore rupees worth. This is after the FPO of Yes Bank. Yes Bank earlier in the year 2020 had issued 15,000 crores worth of an FPO. Now, there are certain investments already decided by Vodafone Idea. They have the ratio of this particular 18,000 crores or this FPO that they want to bring in investments. Firstly, they have 50% of this FPO, which is going to be in the format of QIBs. Now, what are QIBs? QIBs are qualified institutional buyers who are basically connected with, you can say, the big chunk of investment. The format of mutual fund companies, bigger banks, or any other institutions who are already having a big name in the market in the format of a company or corporate or institution. So based on that, they will be making certain investments. So this is huge investment that is going to come up in the format of 50% of this particular FPO. Second part that they have pre-decided is that 15% will go to NIIs. Now, NIIs are non-institutional investors. These people are the ones who invest more than 2 lakh rupees amount into this particular FPO. So basically, these people who invest above 2 lakh rupees are called as high net worth individuals. So even you can fill up a form when you're buying on this FPO and claim that you're a high net worth individual. Okay. So those are non-institutional investors, which are in this particular case up to 15% of the investment of this FPO. And finally, the retail investors like you and me who would buy for this particular FPO, where we will be bidding in this price range of 10 to 11 and buying the portion which is less than 2 lakh rupees. So if we bid more than 2 lakh rupees, we can also be going in the category of NII. But if you are not buying more than 2 lakh rupees worth of shares, then you will be coming in the category of retail investors. And that percentile of investment is 35% of the entire shares which are going to be given away in the FPO. So 35% will be given to retail investors. How are you going to bid on this? Basically, the bid price is decided as 10 to 11, and the lot size, that means how many number of shares you can buy in one lot, is 1298. So minimum number of shares that you buy is 1298 at the price in the price range of 10 to 11 rupees. So you can place your bid and quote, let's say 10 rupees on this particular share. I'm buying it at 10 rupees, and accordingly you may be allotted the share or you may not be allotted the share. Okay. Now, listing of this particular share is going to take place after the entire process is completed, and it's going to be on both BSE and NSE. So as an investor, you have a fair chance of trading in this share ahead also once it gets listed on the stock exchange. Now, basically, this is like a hope for the telecom sector, because this is the third largest telecom company in India. And if this gets revived well, it has a good profitability position. It makes its mark in the market. It's going to give a good competition for the other people, and that creates a fair price range and everything for the consumers also. So better prices will happen, and we can expect better pricing in the telecom sector in terms of packages and data charges and all that, if this company is a good strong player ahead. So in terms of the company performance, we can expect a better performance ahead, because the company is taking up this money for the purpose of better expansive activities. And at the same time, as an investor, if the company is revived well and if it's surviving well ahead, you have a fair chance of having a better price of this particular share on the stock exchange. So that could be an advantage for you as for the investors of this particular share. So with this, we have understood a number of things connected with the Vodafone Idea FPO, and a number of terms also we have understood which are commonly used by companies, by investors, and how actually this particular subscription and everything takes place. So hopefully this video can be used by people who are connected with commerce, and also the students can treat this as a live case study, which can be very interesting for connecting it with studies of company law, with finance and other such subjects. So for further interesting videos like this and further updates, stay subscribed to Commerce GYAN. Thank you, and see you in the next video.